Are you buying a commercial real estate property? Watch this video to learn 9 questions to ask your commercial lender before your next deal. But before we talk about these lender questions, I want to take a moment to talk about Ronald Rohde Law. We're a commercial real estate firm. We help investors acquire and manage commercial real estate from industrial. Check out this book on Amazon, Investing in Industrial Real Estate. We do a lot of multifamily transactions, and we're here to serve you with a lot of expertise from investors like you. Be sure to smash that like button, drop a comment if you have any different experiences, or subscribe for more content. Hey guys, Ron from Ronald Rohde Law, and in this video we're going to go through 9 vital questions that you need to ask your commercial lender. The commercial lender is one of the most important pieces of purchasing commercial real estate, industrial, multifamily. Your lender is coming as a partner, a financial partner into a deal where they have 55, 75, maybe even 80% of the total purchase price. And therefore, anybody who's coming in with that amount of capital certainly has a large impact on the profitability of your deal. So let's jump in. There's going to be 9 questions, and I'm going to talk a little bit specifically about commercial lending for industrial properties. So the first question you want to ask is, are you an expert in my market? And what this means is, how many industrial deals do they do? So for example, a big problem that I've seen is if a single tenant building is applying with a regular lender, sometimes they apply a vacancy to their own DSCR or their debt service coverage ratios, and they apply a vacancy factor for a single tenant building, which is just wildly inappropriate. If you have a single tenant, it's either going to remain occupied at 100% or it's going to go dark. There's not really a chance of losing 10%, losing 25%, or having turnover like on a multifamily property or a large multi-tenant office. Second, what is the average loan size? And this is, related to one of the big pieces of advice that I always give my clients, which is work with the smallest lender that can do your size of deal. So, for example, if you're buying a $20 million property, you're looking at a $15, $16, $17, $18 million loan, you probably can't go with a credit union. That's going to be above their single borrower limits. They may not have the deployment, and they're probably just not going to be as experienced. But you can go with a small regional bank. And so that's the lesson here. What's the average loan size? If they are typically dealing with $20, $30, $40 million loans, they're not going to want to do your smaller $3 or $5 million. And it's just not going to be a good fit. They're not going to have procedures and expectations set up to manage a smaller loan size, which may also have a shorter timing for the closing. And that leads me to my third point. How long does it typically take to close? And there are certain steps that you should ask them about. Are they going to produce a letter of interest? Are they going to produce a term sheet? Because typically that term sheet will be a 1 to 2 page, similar to an LOI, but it's an LOI from a lender. And when you ask for this document in the process, it slows down the approval, which is totally okay if you have enough time, maybe a 90-day to close. But you need that term sheet to enhance your offer or to feel comfortable that you can close. The alternative, and what is more common, is probably no term sheet, no written description other than an email form. And the lender will say, we like this deal, we want to move forward, let's just move towards closing. Do you select us? And then you may sign you may sign a loan application with them. You may pay some fees, rate lock, that sort of thing, but there is no formal term sheet. And so that's an important distinction, is how long does it take to typically close from various stages? Approvals, getting all your apps in, and approval. Let's also talk about the credit committee. This is a really good question that will reflect on how experienced you are. Is how often does your credit committee meet, or what's your loan approval process? Because some smaller banks will have a credit committee of 3 to 5 people, and they meet every week, once a week. Other banks will have a smaller or larger committee that meets twice a week. And so you're able to get your documents in a lot faster if you have a credit committee that meets twice a week, say Tuesdays and Fridays. Number 4. What other loan options are available? I think that that's really important when you are working with a bank. Maybe you're working with a mortgage broker and different agency options. But for industrial investments, they really don't have too many options. You're not going to be looking at SBA. You're probably not going to be looking at adjustable rate mortgages, but you might as well ask, because sometimes when they only have a few tools, or you come to them saying, I want this type of loan product, you don't really know what the bank also has out there. So number 5, what are the application fees, and do they charge any application fees? So this is probably a broader question, but it really relates to some things like the appraisal. You may have to pay $5,000 for an appraisal. You may pay for the phase 1. You may have an application fee. It may be nominal depending on your loan size. For commercial investments in industrial right now, they're very hot and heavy, so I don't think you're going to have to pay a lot of fees up front. Maybe just like a rate lock. But number 6, can I have a copy of my appraisal? That's really, really common. And the short answer is, if you pay for it, you're entitled to it. And you may not be able to use it in the same capacity as before, but in general, if you pay for it, it's your report. Is there a good faith deposit or a rate lock fee? That's important. It can be anywhere from 1% to 2%, and you have to do that pretty early on in the process, maybe after your due diligence has expired, but well before closing if you want to lock in that rate. And if you don't close for whatever reason, or if you terminate, those funds are out of pocket from you as a buyer, and you may have some contractual recourse against the seller, but contact your attorney and we can put that clause in your next PSA. Finally, number 9, how much insurance do I need? And I think this one's important because a lot of different investors are buying industrial land where the value is really in the land, and you may not want to cover as much insurance because there's a highest and best use for the land. So if there was a catastrophic destruction, you don't want to insure for the full replacement cost of that type of building because you're planning on redeveloping anyway. So I think that's really important because it's all pre-negotiated. There are no requirements, and even if they tell you that they want $2 million or $5 million of coverage, you can negotiate that down based on the circumstances. So that wraps up this handy list. I hope it was useful. Please smash that like button, drop a comment if you guys have any questions about working with your lender, and subscribe for more commercial real estate content.